I wanted to make myself sound really nice. Uh, Thank you so much for staying. Uh, it's always tough with these things, and wanting to get here. I do have to throw the one caveat out there. I'm so glad that this is in Miami. I do a lot of traveling across the U.S. South, and the fact that I forgot socks would not go as well in certain markets. So thankfully we're not in Oklahoma City. All jokes aside, I'm happy to be here. I do work in the U.S. South, which is basically, if you draw a line from Kentucky down to Florida, which they're actually in a straight line, Kentucky to Florida to Texas. So that's kind of my area. But I have been in the green building industry for uh, several decades, since I was about 5 years old. This is not. There we go. Wait. Oh, this is this is not the deck that I am working off of, but it's not working now. Yeah, I am pushing down. Okay. Well, I'm just going to wing it because this is not exactly what I was preparing on. But we've heard a lot about the things that people are doing in the industry and whatnot. And I'm not going to have a whole lot that's brand new to say on that. But we've seen and we've heard throughout this that particularly the business industry, and in our case, what I'd say is the real estate industry, it is continually changing. And there we go. So these are some of the things that many people here have already said that, and what we're hearing from investors in this space is that, uh, you know, tenants, but in many cases, employees, and we maybe say talent in these spaces want to work in places that mean something better for them. The global capital market is decarbonizing. We've talked a lot about that today. Physical climate risk continues to increase. And we've talked a lot about that with resilience today. Transparency expectations continue to rise, whether it's the direct consumer, people that you're working with, and then operating performance is always under pressure. People are always trying to eke out more money, drive down costs in their spaces. So this is the place that we work in within the green building industry, and many of the challenges that we're trying uh, to implement solutions for the board. So first, I should ask, how many people are familiar with the U.S. Green Building Council? I know that there are a couple of shout outs there. Okay, yeah, you know people. Okay, excellent. How many people have been in a LEED certified building? How many people have worked on a LEED certified building? Well, let's go to the snacks. Let's go to the snacks. You already know this. Come on. There we go. So this is really the state of the market right now. There are buildings that are high performing buildings, and there's buildings that are not high performing buildings. And we're seeing a differential in those and how people value those buildings in the marketplace. So there's these high performing buildings and assets, they have lower costs of capital, stronger tenant demand, insurance stability, better exit valuation, so on and so forth. There was a study by JLL recently, and there's a bunch of different studies that are out there that high performing buildings, particularly buildings that are certified, are actually commanding premiums and sales of above 21% above non-certified buildings. There's an 11 to 31% premium on certified buildings over non-certified buildings. We've heard this time and again. There's a great study by Cushman and Wakefield. I think they were commanding, I'm horrible with numbers, but I think it was like upwards of 70% premium on Class B suburban office spaces that were LEED certified over the competition. So we know that these buildings are valued at a higher level. On the opposite end of the spectrum, you have buildings that are not high performers. They haven't continued that investment. They haven't stayed with the market. They haven't stayed with, where things are going, and they become stranded assets. People don't want them. In many cases, the cost of the building or the value of the building or to renovate it isn't worth as much as the land that it's on, right? We've got this scenario where there are really great high performing buildings and people are making money off of it, frankly, and doing good things and getting all this PR and whatnot. And in other cases, you've got buildings that now become assets. And so this is really exciting, sick and twisted way, for me, because before green buildings, when I started in the industry in the 1830s, we were always saying, "Oh yeah, it's great for the planet. It's great for the planet." And really, at the end of the day, it's great for business. And we always said it was great for business, but now we're actually up to the point where it is good for business, and we're able to see that. across the board. So what we're doing, and those of you who are familiar with Lead V5, I didn't want to do a Lead V5 presentation. Lead V5 is our newest version of Lead. It came out last year. Um, I didn't want to just get into the nuts and bolts of that because it can be a little too much. So I'm going to weave it through here. But what we're looking at with this next version of LEED is really making sure that buildings that are certified under LEED are future ready. They're low carbon buildings, that they are going with this trend of not only thinking about what is happening right now, but where is the market going? How do we make buildings that are not just good for the planet, but they're thinking of the future in multitudes of ways that they can kind of weather multiple storms, economic storms, environmental storms, so on and so forth, and become more attractive across the board. So I have to click it 3 or 4 times. So if I wasn't sure who was going to be in the room, so I'm going to go through this quick. If you're not familiar with LEED, it is the most widely used green building rating system in the world. And the beautiful thing, and I never know what slide's coming next. It is used in 196 countries around the world. We have over 130,000 projects which are certified under the system. So we have a lot of data and a lot of experience with this. And I was so happy to hear many of examples of that today. We are continuing to see that not only are people doing more green buildings, but they're doing them for a lot of different reasons. It's not just because, oh, it's good for the polar bears anymore. It's good for business at that core that core level. So, okay, this is the slide I was thinking of there. The other thing, the advantage of LEED, rather than saying, hey, I'm going to focus, I loved your challenge to us. It's not just about carbon. We are trying to think holistically about the built environment. We want to make sure that we're choosing a good place for where that building is located, that it's connected to the community around it. We want to make sure that what's happening on the land on that space is good for ecology. We want to, of course, drive down energy, have renewable energy, reduce our operating costs through water, but we also really need to make sure that it's good for people. Buildings exist. Why do we build buildings? What's the number one reason? What's that? Shelter? What shelter what? Exactly. People. Buildings do not exist if there are not people, right? So we have to think about the impacts of those buildings on people, people in the building, people that are working on the building, people that are around that building. And so environmental health is important, but also human health and human quality of life is critical to what we do in the LEED rating system. And I don't know if this works. We can send it to you afterwards. If you're interested in more on LEED, there it is. We'll have some QR codes in here. Come on. I should have just stuck with it. There we go. So LEED has been around for about 25 years, more than 25 years, and it is the most largely used rating system that's out there. But with this comes this like responsibility, right, of continually evolving this rating system so that it's not just kind of stagnant, or we do a little bit more. We're continually pushing, and sometimes I frankly say pulling the marketplace to do more, to do better, to take the challenge. And so those of you who might have worked on a LEED 2.0 project or a LEED 2009 project and haven't seen it since then, it is quite different from then. I still hear people say, oh yeah, I did LEED, I put the bike racks in. Good for you. It is much more than that. We've evolved the rating system. First, it was about doing a whole bunch of good things, and then it was about trying to do things that had less harm. Then we started to try to quantify that and do things that were actually proactive for the environment. Then we tried to be much more explicit about measurement of that. Now we're taking it to a completely new level and really building the rating system to not just meet the needs of today, but meet the needs of the future. And so some of the benefits that I'm going to go through in this are these are the measurable advantages to not only doing a green building, but I will dare to say a certified green building, because who has kids? Okay, I don't have kids. The next generation was coming from my neutered Shih Tzu. So but kids, when your kids say, yeah, I did my homework, do you check that they did their homework? And then does it get graded by the teacher, right? So we're making these huge investments in buildings, and people are saying, yeah, I did green building, but did we check it, right? So green building is one thing, and that verification, that check that we do to get the certification is extremely important to ensure, because there's so many moving parts in that building. So I'm going to talk about some of the biggest benefits that we see of this, and how we're continuing to evolve the rating system to deliver on that value and those benefits. Oops, I wanted to move this to the end. I'll talk about it now. Once again, different slide deck. Before we talk about benefits, I can't stress enough that the way to approach buildings is not to slap on the green stuff, not to slap on the environmental stuff and say, okay, that's great. If you make those decisions early and you set those goals early, the pre-development phase, and then they're integrated throughout the process of that building, all through operations, 40 years from that time that whoever developed that building said, I want to do it, that's where you're going to get the most value, right? So the biggest long-term impacts, 70 to 80% of those impacts are determined in the first few, dare I say, months of the development process, right? So what we do now, and not only the choices we make, but the decisions and the expectations that we make early on are absolutely critical to this. So I get more time for, yeah, I know it's like, I gotta do something here. So of course, operations, we know that green buildings, we focus on energy efficiency, all these things, we're going to reduce our operations costs. LEED certified buildings have a minimum, I'd say, of about a 20% reduction in their operating costs, as it's energy, water, so on and so forth, which is fantastic. When we reinvest in deep retrofits of buildings to bring them up to code, we're seeing, savings of 10 to 40%, which results in real dollars saved, right? So there's this a definite connection between these. So I don't think anybody, particularly, let's say you've got a 1,000,000 square foot building and you're saving up to $2 per square foot per year, you got an extra 2 million in your pocket. What are you going to do with that? We're going to go to her luxury resort in Dominican Republic, probably. But energy efficiency is the stepping stone. And in LEED version 5, what we have done is actually flip the script, where we talked a lot about energy. And LEED stands for Energy Leadership in Energy and Environmental Design. We don't talk about that. We just say LEED now because people know it. But we've reshifted, or we've refocused much conversation around carbon, because carbon does force you to think holistically in many ways. So we're addressing operational carbon, we're addressing transportation carbon, and we're addressing embodied carbon, which is, as we're driving down operational carbon, embodied carbon becomes increasingly important. So decarbonization is really the about 50% of what's in LEED. It focuses specifically on decarbonization strategies. And we know that when you're focused on decarbonization, your building becomes more attractive, and that opens up doors for all types of incentives. And we'll talk a little bit about that more. It also reduces your regulatory risk, as I think you all probably know more than me, because I don't actually do the work, I just talk about it. So I'm not going to get into the details of this slide, but in this next version of LEED, we're requiring that every single building does a projection of its carbon use out for a certain amount of time to know where that building is going. It's great. Hey, how did I model my energy use for right now, but where is that going, and what does that carbon trajectory look like over the lifespan of that building? And so that knowing that helps you to make decisions early in the process. Uh, Once again, buildings exist for one reason. That's the people in the buildings. You can see all of the benefits of this. But at the end of the day, one of my favorite stories is of an old building, and I'll just kind of summarize it. They had a bunch of old nuns, average age of 80 years, in there. They renovated their building. There was a nun who was on oxygen. She moved back in, and she went off of oxygen. So all of this great stuff, you can't quantify the impacts that it has on people and their health. But the biggest cost per square foot is in people. So again, we're seeing that, and people in LEED buildings are happier. We see this across the board. These are just LEED certified buildings, and the bigger investment in a platinum building, people's satisfaction scores are actually higher. This is real data in a snapshot from April. Um, there we go. Resilience. We talked a lot about resilience. Every dollar that's spent in resilience yields $13 in economic impact over the life of the building. Uh, there was just going to bring this down a little bit more. The Chamber of Commerce and Allstate modeled all these 25 scenarios across the country. And here in Miami, they said if there's a category 4 hurricane, the potential impact could be 1 to 100. Oh, sorry. Category 4 could be 184,000 jobs lost, 26 billion lost in productivity, and 17 billion of lost income on top of having to replace all those things. So we know that the impact of resilience is there and increasingly being talked about at the corporate level. God. So I'm just going to end this resilience conversation and say that one of the things that we're doing in LEED v5 is requiring that every single building do a baseline resilience assessment to understand what are the biggest threats to that building. We require you to do it. Those of us who grew up in the 80s with GI Joe says know that knowing is half the battle. Once you know what the impacts are, then you have to kind of do something about it. If you say, I knew that was going to happen, but I didn't do anything, it puts you in a little bit of a situation and gets you past the risk. Similarly, we have one for human impact assessments, which I didn't get into here. And lastly, ESG reporting. We've talked a lot about ESG reporting, and I was so happy to hear of the uh, Dominican Republic example where she was able to, Sophia was able to unlock what was 135 million dollars in ESG related funding. We're seeing this more and more. So if you want more information, you can pull out your phone and pull up this report. We have a great report on sustainable finance. I'm happy to send it to you afterwards as well. We're seeing this more and more and more. And in places, I'm just going to say it because we're in Florida. I know that there's a lot of pressures from the political side here in Florida. We can't say ESG, just 3 little letters. But if you want to have a competitive market and you want to have a competitive place, global markets are demanding this. Global markets are offering this, and you're doing a disservice in your local community, in your local state, by kind of outlawing these things, for lack of a better word, because this is where it's going. And if you're trying to attract investors, particularly global investment, uh, they're increasingly asking for this. So we're excited to see how LEED and other green building certification systems have aligned around, there we go, around that. So I want to point out or right up the street, the Citigroup Center, one of the first LEED v5 projects, an incredible example of this. If you haven't seen it, go and check that out. I wanted to give a shout out to that because it's here in, there we go. Heinz is another one. I wanted to give a portfolio example where they've invested in not just doing LEED across hundreds of buildings across their portfolio, but it's looking at their buildings as a big part of their ESG strategy, because they know that certification, they can't just, come on, where do I point it to go forward? It's not, it's like, whatever. They know that that's just part of it, but there's so many multipliers when you start to kind of blow this up and think about it from that perspective. So I'm going to leave you with these 3 things. If you're doing new construction, there's so much that you can do early on in the process to set your building up for the future. If you have an existing building, you can still do things with that. We want to reinvest in our existing building stock. Most of the buildings are already there. And then there are also things that you can do in setting goals at the high level with your portfolio. When you do our breakouts, we have a ton of tools. A lot of these tools are actually free to help you to do this. So I'm happy to talk a little bit more about that. And I don't know, slide. It's just an ending slide. It has my contact information, but you can find me at whatever table. Awesome. Thank you.